Welcome to the Deep Dive. We cut through the noise, get you informed fast. Today, Autodesk, the latest financials from the company. Behind so much design and make software, we're looking at their Q2 results, what's driving things, and what the future might hold. Let's get straight into it. Okay, so let's unpack this. Autodesk just put out their Q2 fiscal 2026 results. This is for the period ending July 31st, 2025. And right off the bat, the headlines look really strong. Significant growth here. For you, the really striking numbers initially. Revenue hit, $1.76 billion. That's a solid 17% jump year over year, actually 18% if you look at constant currency. But maybe even more impressive, billings leaped to $1.678 billion. That's up 36%. Quite a jump. What's your sort of immediate take on those big numbers? Is it really as good as it sounds?
Well, my first reaction, is that 36% billings jump. That really stands out. I mean, for a subscription company like Autodesk, billings are just so crucial. It's a leading indicator, right? It shows the value of customer commitments made in the quarter. Seeing that kind of increase, it tells you customers aren't just renewing, they're expanding. Bigger deals, longer terms is a really strong signal for future revenue, exactly what you want to see. But yeah, beyond the top line, I'm always looking at profitability, cash flow. They tell more of the story. And that part of the story, it's just as compelling, frankly. Their non-GAAP operating margin, it held up well at 39%. That's up 1 percentage point from last year. And non-GAAP EPS, earnings per share, adjusted hit $2.62. That's up a healthy $0.47. These aren't just, nice to have numbers. They show real operational efficiency. They show Autodesk is actually converting that growth into profit.
Okay, so strong revenue, good profit conversion. But converting that into actual cash is key for the long haul, isn't it? How did they do there, and what does that kind of cash generation really let them do?
Right, and this is where it gets quite insightful. Cash flow from operations shot up 117% to $460 million. And free cash flow even better jumped 122% to $451 million. These are, exceptionally strong figures. Shows real underlying financial health. It means they're not just selling more, they're doing it efficiently, turning sales into cash very effectively. And that gives them, options, strategic flexibility, money to reinvest in R&D, maybe look at acquisitions or return value to shareholders. All crucial, especially if the broader economy gets shaky.
Yeah, those cash flow numbers definitely highlight the operational strength. Okay, so with this strong base, what did the CEO, Andrea Ignace, say? What's the strategy? You talked about their history, right? Being at the forefront, BIM, SaaS, generative design, and now generative AI. He specifically mentioned building, industry-specific foundation models and products, capable of understanding and reasoning about 2D and 3D geometry, complex structures, even physical behavior. Sounds ambitious. Sounds like they're really pushing into AI.
Exactly. And his comments, they aren't just, buzzwords about the latest tech trend. It points to a very deliberate strategic push into AI, one that really leverages more than a decade they've spent building their industry cloud and platform ecosystems. What's interesting is it's not a sudden pivot. It feels like a natural evolution for them. Focusing on industry-specific models, that's key. They want AI tools that get the nuances of design, of engineering, that could really deepen their competitive advantage, make their software stickier, maybe even open up new markets. It positions them for a future where AI is, central.
Right, building on what they already have. That makes sense. Their CFO, Janesh Moorjani, also chimed in, called it another strong quarter. And he specifically pointed to strength in AECO, that's architecture, engineering, construction, and operations. He mentioned customers are benefiting from sustained investment in data centers, infrastructure, and industrial buildings, and that this strength is apparently offsetting any softness in the commercial building sector. Shows a focus on resilient areas. But I wonder how much that AECO strength is tied to maybe cyclical things like this data center boom we're seeing. Is there a risk there, a concentration risk if things shift?
That's a fair question, a critical one, actually. And yes, the data center and infrastructure spending definitely helps right now. It's a tailwind. But I think AECO's growth is broader than that. There's a fundamental push for digitalization, for efficiency in those industries globally. Things like BIM adoption, integrated workflows, that shift is still happening, and Autodesk is right in the middle of it. So while specific project types might ebb and flow, the overall trend in AECO seems pretty solid. And they have diversified within AECO, covering different areas, which helps mitigate that concentration risk you mentioned. Look at the numbers. AECO revenue grew 23% year over year, 24% in constant currency, reached $878 million. It's their biggest product family and their fastest growing. So their focus there is definitely paying off. It's a core engine.
And it wasn't just AECO, right? Other areas grew too.
Yeah.
Design revenue, that's a lot of their core stuff, hit $1.472 billion, up 17%. Solid. And make revenue, their manufacturing side, $194 million. That's up 20%. Also healthy. Geographically, the Americas and EEA seem to lead, both up 19% in constant currency. Strong international performance, too.
Yeah, absolutely. And to get a sense of the longer term picture, the future health, you really need to look at their RPO, remaining performance obligations. This metric, it's basically the total value of contracted revenue they expect to recognize down the road. It includes deferred revenue stuff already billed and unbilled deferred revenue. It's a key forward-looking number. And it reached $7.297 billion. That's up 24% year over year. Impressive. But what's really compelling is the unbilled part, the revenue locked in but not yet invoiced. That jumped 59% to $3.453 billion. That's not just a number, it signals huge, secured future revenue streams, gives you a strong view of where they're headed, shows real customer commitment.
Right. And another key metric for subscriptions, net revenue retention rate, NR3. That was above 110% in constant currency. And they specifically mentioned this was in part due to the new transaction model. What exactly is that model, and why is it helping keep customers spending more?
Good question. So the new transaction model, it generally refers to Autodesk moving towards more flexible ways to subscribe, often usage-based or pay-as-you-go elements. Traditional software licenses could be pretty rigid. This new approach tries to align the cost better with the value a customer actually gets, how much they use it. The fact their NR3, which measures how much existing customers increase their spending, is over 110%, and they link it partly to this model, that's very telling. It suggests that offering more flexibility, maybe more granular options, is actually encouraging customers to use more, adopt more tools, and ultimately spend more. It's smart. Adapting to how customers want to buy and use software now seems like a successful strategy.
Okay, that paints a clear picture of Q2. So looking ahead now, they also gave guidance, right, for Q3 and the full fiscal year 2026 ending next January.
They did. And what's quite interesting here is they said they haven't changed their macroeconomic assumptions for the full year, meaning they're not banking on the global economy suddenly improving to hit their numbers. Yet despite that caution, they actually raised their full year guidance. Now, some of that is foreign exchange helping a bit, but it mainly reflects the underlying strength they saw in the first half, their operational performance, their strategic focus areas. It really speaks to confidence in their own execution, their own business drivers, even if the broader economy is just okay. They think they can outperform their previous expectations.
And what are those updated expectations? For the full fiscal year 2026, revenue, they're now seeing between $7.025 billion and $7.075 billion. That's roughly 15% growth year over year, still strong. And non-GAAP EPS projected between $9.80 and $9.90. So continued profitability expected.
Exactly. And connecting that back to cash flow, their free cash flow guidance for the full year is also robust, estimated between $2.2 billion and $2.275 billion. Now, that number includes a few specific things, about $50 million in capital spending, and also a significant discrete cash benefit, about $130 to $150 million from using up some U.S. deferred tax assets, basically cashing in on past tax benefits. It's also worth noting they expect most of the second half free cash flow to land in the fourth quarter.
Okay, it's waiting towards Q4. Is that typical for Autodesk, or does it flag anything unusual about maybe customer payments or something later in the year?
No, that's actually a fairly common pattern for them, and for many software companies, really. Their invoicing, their collections, they often have a strong finish to the fiscal year. Think about large enterprise customers finalizing budgets, procurement for the next calendar year. That tends to happen late in Autodesk's fiscal year. So more renewals, new deals, collections often cluster in Q4. It's more of an established rhythm for them, not really a red flag. It points to a predictable pattern. They're also guiding for a full-year non-GAAP operating margin around 37% and a non-GAAP tax rate of 19%. All suggesting stability.
Okay, good context. Now, before we finish, there was one other important piece of news in their release. Adds quite a bit of context, removes some past uncertainty. You might recall back in early March 2024, their audit committee started an internal investigation. It was about their free cash flow and non-GAAP operating margin practices. And that led to contact from the U.S. Attorney's Office and the SEC.
Right. And the big news here is the resolution. It's done. Both the SEC and the USAO have now formally notified Autodesk they're closing their investigations. The SEC on August 19th, the USAO just a couple of days later on August 21st, 2025. This brings a clear end to that whole period of uncertainty. And for you as someone watching the company, this is really important. It lifts a significant overhang. These kinds of investigations, whatever the outcome, can be a huge distraction for management, a risk for investors. Closing them lets Autodesk put its full focus back on the business, on strategy, without that cloud hanging over them. It's a very positive development. Boosts clarity, boosts confidence.
So that wraps up our deep dive into Autodesk's Q2 fiscal 2026. We've seen really strong financials, impressive revenue, billings, especially that cash flow improvement, a clear strategy leaning into AI, leveraging their industry clouds with, real momentum in AECO, and a positive outlook for the year, definitely helped by getting those investigations closed out.
Yeah, it paints a pretty solid picture. And it leaves you with an interesting question to think about. As Autodesk keeps pushing generative AI, building on that deep industry knowledge, and focusing on growth sectors like AECO, how will that shape their competitive position long term? And maybe just as importantly, how will it affect their ability to attract and keep the designers and engineers of the future? Something to watch.
Definitely something to keep an eye on. Thanks for diving deep with us. We'll catch you next time.